Hello and welcome to the CNBC TV18 Mumbai studio. I'm Ekta Batra and you're watching Your Stocks this afternoon. Well, joining us today, we have Mayuresh Joshi, who's the head of equity research at William O'Neill, Ruchit Jain of 5paisa.com to answer all of your queries. Mayuresh as well as Ruchit, welcome to the show and thanks very much for joining in. Well, before we get to, the queries that we do have, we have the Torrent Pharma numbers which are flashing on your screen. There's a one-time gain which is coming off around 88 odd crores. But the revenue as well as the profit should come up for you. The net profit is coming at around 443 odd crores. It has benefited from a one-time gain of around 88 odd crores. The other numbers such as the revenue as well as the margin should come up 2,732 odd crores. So largely in line with estimates is what they have reported. And the margins are expected to be steady state this time as well at over 25 odd percent. That's on Torrent Pharma. But it's going well for the markets at this point in time. We're holding up with steady gains of around 0.8% currently for the Nifty. So before we move ahead, just wanted your quick take on the technicals, Ruchit. How would you approach the strength that we've seen today as well as for the week?
Hi, very good afternoon, Ekta. Well, there's no doubt about the broader trend that it still remains positive. We have seen that the intermittent declines which were there towards the 2100 300 support have got bought into. And we have almost surpassed that previous swing highs as well. So that higher top, high bottom structure is still getting continued. No signs of reversal there as of now. So I think buy and dips approach should be for the coming week as well. Now the support for Nifty is coming around 21,700 to 21,650 range. So I think we could see some another 150 point decline from current levels. But in case if we get some dips around those ranges, I think that could be a good buying opportunity again.
Okay, all right. Well, maybe there could be a buying opportunity on dips. Let's get to the first question that we have. We have Parag who writes to us from Mumbai. He holds 200 shares of Bank of Maharashtra, which he's bought at 10 odd rupees. So that's a great gain that he's sitting on. He wants to know what to do, whether he should buy more, hold or sell. Well, it's definitely been a rally of all of the PSU banks. Mayuresh, what would you recommend on this one? Would you be a buyer at current levels?
Afternoon, Ekta. So as a clear disclosure, we are holding the stocks in our global portfolio. So I might be a little bit biased towards this one. But largely, I think if it pulls back a tad bit, yes, he can pyramid more. I think that's the way we look at compounding wealth on our winners. Having said that, Ekta, I think the kind of numbers that have come through, specifically for the December quarter, cost to income ratio has come down to 36%. The asset quality pressures are coming down with every passing quarter. Gross NPS close to 2%, net NPS close to 0.22%. And along with that, I think the kind of provisioning that they have increased, the PCR is at 98.5%, which means that the kind of write backs that they probably might have from a lot of written off assets that can directly compound their bottom line growth. And a lot of PSU banks are probably focused on that, along with strong advances growth. Retail advances have grown 22 odd percent. NIMs are close to that 4% mark, 3.95 if I'm not mistaken. And therefore, most of the parameters, most of the check boxes are probably getting ticked at this juncture and not too expensive, even at this juncture with the kind of moves that we've seen. So we can definitely hold on to this one. As a disclaimer, as I said, we hold this in our global portfolios. If it pulls back a tad bit, we can pyramid more onto bank.
Okay, all right. And Ruchit, technically, what would your call be on Bank of Maharashtra?
So I have a similar view to hold on to the stock. Ideally, if you look at the entire PSU banking basket, they have shown immense relative strength compared to Bank Nifty. You see, the Bank Nifty is still not closer to its previous all-time high, which it had recently tested. But Nifty PSU Bank Index is continuing to make new highs. So this clearly shows that within the banking space, the PSU banking stocks have a lot of strength, and Bank of Maharashtra too has witnessed an upmove which is supported by very high volumes. So first of all, his buying price is quite low. So he has a good margin of safety that in case if we get any kind of intermediate small declines or pullback moves, then he can continue to watch those moves. And over a period of time, the monthly charts indicates probable targets around 72 to 75 range. So I think if there is a long-term investor, continue to hold on. Maybe around 75, we can take a review again on this.
Okay, all right. So that's on Bank of Maharashtra. Well, let's get to another query now. We have Madhvi Lata who writes to us from Vizag. holds 50 shares of Tata Motors, which he's bought at 289. So good to see a lot of people making money on various stocks. She wants to know what to do, whether to hold or exit at current levels. What would your recommendation be on this one? Mayuresh, again, Tata Motors has just gone from strength to strength. What is your call in terms of where you would see the stock go fundamentally?
Oh, absolutely. Ekta, stupendous mover within the auto space. And again, a little bit biased because we continue holding this in our global portfolios as well. So I think the change or the transition that has probably happened is the outlook, specifically on the JLR business. And specifically in the last quarter, the management was very, very vocal in terms of the margin expansion, specifically for the JLR business. And that EBIT margin expansion for 24 has been increased to 8% from 6%. Now, what this really does is, because a large part of the business comes in from JLR, the order book has remained strong, both on the wholesale and the retail side as far as JLR is concerned. And expectations of launches on the EV side of their portfolio in the next few quarters, coinciding with expectations of China and North America coming back as far as demand dynamics are concerned, that can fuel a leg up in terms of volume growth. And what it probably does in terms of the investments that they're probably doing, 15 billion odd pounds for the transition over the next 5 years, cash impairments expected to come off. And the India business, both the PV and the CV business, actually holding up means that the consolidated numbers will also be better. Obviously, a lot of that has got gestated in the price. But as these launches happen over the next few quarters and months, I think more and more revisions will start taking place in terms of forward-looking numbers. So yeah, she can definitely hold on to this one.
Okay, and technically, what would you recommend to someone, Richard, who's entered the stock at over 250 odd rupees? Do you think there's more to go when it comes to the technicals of TAMO? Would you buy a stock which is already making new highs?
Like you rightly pointed earlier, it's going strength to strength. So that should be one clear strategy, that if a stock is showing strength in this up move compared to other stocks within the same sector, so this outperformance is likely to continue till this bull market is intact. Generally, whenever stocks are trading at all-time highs, so retracement helps us to come out with the possible targets for the stocks. And if I look at a bit longer-term charts, then retracements of the previous correction, then short-term targets are coming around 940. Whereas a bit mid to long-term targets are coming around 1150. So I think the stock has potential to rally further. 940 is a very short-term target, but I think 1150 is where it should eye at. So keeping a targets of 1150, definitely continue to hold on the existing long positions.
Okay, all right. That's on Tata Motors. Let's get in another query now. Rahul Khanna writes to us from New Delhi. He holds 15 shares of State Bank of India, which he's bought at 400 odd rupees. He wants to know what to do, whether he should stay invested, sell at current levels. Richard, let's come to you first. The big trigger for SBI, and I'm going to quiz Mayuresh on it as well, is that the numbers do come out tomorrow. It is on a weekend, so the street will react to it come Monday. But technically, Rahul's sitting on a bit of a profit now. But do you think that State Bank of India has more to go and participate in this PSU Bank rally?
So we already covered about PSU banks, when we took that Bank of Maharashtra question, that how the index has been outperforming the Bank Nifty overall. So I think this trend is likely to continue. And given that SBI has the highest weightage within the index, the index cannot move higher without SBI showing participation. So certainly the trend remains positive. Recently we had seen some correction, but again, if you look at the price volume action, then the volumes during the corrections are not that high compared to volumes that we see when the prices are going higher. So which is again a good sign for the stock. So I think the stock has potential to rally towards 700 and beyond in short to medium term. So my advice would be to continue to ride this trend.
Okay, all right. And Mayuresh, the numbers are out tomorrow. What would you recommend on SBI?
So as Roshit mentioned, I think the mid caps have done relatively better. Large caps, including State Bank, have not performed as well in the past 1 year. So I think a large part of the expectation as we look at it at MarketSpace India and what we follow as a cancel-in mechanism, the EPS ratings are looking fine. The expectations in terms of numbers, again, should be largely supportive for a bank of this size. So expectations in terms of slippages coming off, expectations in terms of moderation of both the GNPAs and the net NPAs. Restructured book should also probably look a little bit better on a year-on-year basis. NIMs might be a little bit compressed because of the base it works out on. But to a large extent, I think if you're looking forward over the next couple of years and the expectation in terms of a rate cut happening at some point in this calendar year. I think the revert to means in terms of NIMs over the next 4 to 6 quarters is a given. And for a bank like SBI, I think if these numbers show improvement even marginally, sequentially, my own sense is that there is a long way to go in terms of the participation of the rally that this bank can probably give. It is exactly positioned itself at key pivot levels as we look at it at Markets for India. So yeah, remain positive on this one. The investor can probably hold.
Okay, all right. So that's an SBI. Well, Maheshwar Bhanu writes to us from Punjab. He holds 100 shares of Alkali Amines at 2448 and 55 shares of Route Mobile at 1500 rupees. He wants to know what to do, whether it is worth holding these stocks in the medium term for around a 15 to 20% return. Well, 2 stocks in question here. Mayuresh, your call.
So let me address alkyl amines first. So what has largely happened for all these chemical companies is that Chinese destocking, price erosion has largely hit their top line. And because of the hit on top line and the inventory management that they had to do, along with reduction of pricing power, I think the margins have also got a huge hit. Now, at some point of time in this calendar year or financial year, there will be some element of recovery that will take place. For alkyl amines, obviously the expansion of its ethylamine capacity by 30 KTPA is going to take its overall capacity by 30% and overall the plate capacity to almost 200 KTPA, including the specialty chemical portfolio. But I think a large part of their pain comes in from the macro parts of the sector itself. Agrochemicals, pharma, specifically on the export side, still reeling under pressure. They're not able to increase prices both because of competition and because they want to maintain their market share as well. And maybe that pain continues for a couple of quarters. As we see it at Markets for India, again, EPS, RS rating are extremely poor. This stock has underperformed. It will go through a pain for the next couple of quarters. If it doesn't have that patience to hold on for a longer period of time, maybe shifts to the other stocks as we've discussed in the banking and financial space. For Route Mobile, obviously, I think the acquisition that has happened of Route Mobile by Proximus, the expectations in terms of the deal concluding by the end of this quarter, and the expectations in terms of revenue and cost synergies to the tune of $100 billion over the next few quarters would augur well in terms of top line growth. CPaaS as a market should expand from 56 billion to 86 billion over the next 4 years globally. In the local Indian context, the product shift that they're probably doing, more product additions and expectations in terms of client retention reflected in margins at 12.5%. That can augur well if this goes to plan. So yeah, Route Mobile, a relatively better place stock within the two. We can probably hold on to this one with the expectations of some earnings synergies getting built in over the next few quarters.
Okay, Richard, any quick view on these two?
So I think alkyl amines is more into a time-wise corrective phase now. The price-wise corrective phase has already been done. What we have seen that in last 2 or 3 months, the stock has now turned quite sideways. So I'm not expecting any significant up move in the short term, but rather a consolidation phase would continue where 2100 would continue to act as a support and 2500, 2550 would continue to be a resistance. So not expecting any significant in the near term in alkyl amines. Route Mobile, I think I would advise to continue to hold on. The stock too has been consolidating, but whenever we have seen the recent price up moves, that the volumes have started increasing over here. So I think here the downside seems to be very limited, and 1500 has now become a very strong support base for the stock. So once the stock moves above that 1720, 1740, which was the recent swing high, then one can expect a good momentum in the stock towards 1900 as well. So it may take about 4 to 6 months time frame considering the recent consolidation, but I think Route Mobile is worth holding for keeping a 4 to 6 months time frame in mind.
Okay, all right. Mayuresh as well as Ruchit, that's all the time that we have on queries. Thanks very much for joining in. We need to take a short break, but up next on the other side, we'll be joined by the management of Carborundum Universal to discuss their third quarter numbers. Stay tuned.